Fortunately, our stock really went up a lot on the news. Our shareholder base did really turn over. We now have, primarily Bitcoiners as investors. The company is 90% of value is in Bitcoin. So it ended up working out, but there's some risk in that. How to deal with shareholders who are not with you for the Bitcoin.
What is the role of Bitcoin in capital markets? Is it like store of value, treasury assets, or there is more?
It's a great question. I think it's more. I don't think we really know exactly how that plays out. I think it's pretty long term. I think the goal right now for us and other Bitcoin treasuries is to accumulate Bitcoin as digital real estate to kind of, it's like the gold rush, and you want to own, like Michael says, like the major buildings of Manhattan. You want to own Bitcoin because it has this optionality. It's going to be incredibly valuable over time.
Hi, and welcome to the Financial Fox, the show where we explore how technology is reshaping finance, unlocking freedom, and helping us invest smarter. I'm your host, Steffi. I've been in finance for over a decade and started investing in crypto back in 2017. This podcast is all about real conversation with forward-thinking minds to spark new ideas and give you insights that matter. We are going to be talking about Bitcoin for corporation, or Bitcoin Treasury strategies, which is a growing trend among companies seeking alternative ways to revitalize their brand narrative, deploy cash reserves as inflation hedge, and also unlock fresh avenues of shareholder value. Today, I will be joined by Eric Semler, chairman of Semler Scientific, the second US public listed company to adopt a Bitcoin Treasury strategy in 2024. I met Eric in Orlando at the Strategy World event organized by Michael Saylor and the team, and I asked him to come on the show to discuss Bitcoin for corporation, to share his story and also his thoughts about the evolving role of Bitcoin in capital markets. As you know, here at Cassiopeia and myself specifically, we think education is very important. And when it comes down to corporation, it's even more important that you understand Bitcoin as an asset and the role that is playing in the future of corporate growth and capital market. So this episode is going to be very useful for many public listed company CEOs, but also investors as well. Before we get into the interview, just a couple of things. If you are watching our show, please take a moment to subscribe to our YouTube channel and also follow us on social media if you haven't done so already, and you're going to find all the links in the description. Remember that your support is crucial to grow the channel so we can educate more people about crypto. Very important. Remember that all the content on the show is for informational purposes only and not intended as financial advice. Any opinions expressed by me or my guests are ours alone, and you should not act solely on the back of them. As always, do your own research, level up your skills, and be accountable for your own decision. Financial Fox is supported by HIVE Digital Technologies, one of the fastest growing Bitcoin miners publicly listed in the US and Canada. They hold over 2,200 Bitcoin in their treasuries and are on track to scale to 25 exahash by the end of the year. HIVE was also the first crypto miner to implement an AI strategy back in 2021, and their data center in Canada, Sweden, and Paraguay are powered entirely by green energy. Their priority is to build and scale a lean company focused on shareholder values that also transforms the communities where they operate. If you are a brand or a company eyeing AI, check out their Buzz HPC tools for cutting-edge solutions. Visit HiveDigitalTechnologies.com to learn more. With that being said, let's get into the interview. Hi, Eric. How are you doing?
Great. How are you, Steffi?
Yeah, I'm really good. So great to have you on the show. We saw each other. We actually met in Orlando last week at the Strategy World event, which was a really good conference.
Definitely. It was like the Bitcoin version of the Warren Buffett migration to Omaha.
Indeed, it was really good. And I think what was nice was really Michael and strategy bringing together these other companies. They are adopting a Bitcoin treasury strategy and get them all to share their journey, share the way they are putting together also their own playbook in different countries. I think that was really interesting. And then all have different perspective as well from investors, from kind of like service provider. They are facilitating this Bitcoin strategy execution. And so I met you and I said, right, I need to reach out, get him on the show because, maybe in the US is something that has become a trend now. And I think, even capital markets, institutional investors, they start to understand why Bitcoin makes sense for public listed companies. But here in the UK, we are always a bit behind, right?
You'll catch up soon, I'm sure.
Exactly. So, let's get Eric on the show. Let's get you to share your experience. And, as we get more companies, even here in the UK and in Europe, to embrace Bitcoin, you definitely going to be an example that they are going to look at. So I think that perhaps we can start with kind of like the journey. I mean, you are Semler Scientific is the second US public listed company to adopt Bitcoin as a primary treasury reserve asset. So tell me about the journey. When you start, I know it was last year, but I guess that the process wasn't straightforward. You had to do a bit of work to get that through the board and put everything in place to actually be able to execute. Why you decided to go into Bitcoin with your company?
It was definitely a process. It was actually, if you really think about when it first started, it was, it really was probably a 2-year journey. It really started when I decided to join the board of the company and reformulated the board to create kind of a board that had that was more proactive, had a lot of skin in the game, meaning that I reformulated the board so that we had 4 board members who collectively owned 30% or more of the company. So we were very focused on driving shareholder value, and we were looking for ways to kind of reignite growth in our company, which had slowed. We were a company that had been around for almost 20 years. I was a seed investor in the company that my father started, he's no longer involved. But I was a passive investor. I wasn't paying a lot of attention to the company because I had my own career investing in technology and media. I ran a hedge fund for many years called TCS Capital, which at its peak had about $4 billion of assets under management. We were one of the largest TMT funds, but I wasn't a healthcare-oriented investor. And Semler Scientific is a healthcare company and now a Bitcoin company. The companies, started to falter around 2 years ago, and I took notice, decided probably, to take matters into my own hands, went on the board, got board seats, and we spent the last 2 years, kind of looking for ways to jumpstart growth in our business. And we figured the natural way to do that would be probably through acquisitions or a new product. And we couldn't find anything really compelling to do in those areas. So we were considering a stock buyback. Our stock was kind of thinly traded, so that was not going to really help our float, and probably no one really cared. People weren't giving us any credit for the large amount of cash we had on our balance sheet. It was just kind of, we were being ignored. And that was pretty typical of companies our size. We were several $100 million market cap. 40% of our market cap was in cash. There were as Michael Saylor has said, there's like thousands of these, quote, zombie companies, and we were one of those. And I, as an investor in the markets for many years, I knew that these, quote, mid-cap type companies with, kind of a lot of cash and kind of chugging along, making money, but not doing anything too super exciting for investors, were just being ignored and were really going nowhere. And the less you traded, the less they were interested in you. So we had to do something dynamic. And when we hit a wall and decided, God, these acquisitions don't really, excite us, in the back of my mind, I'm thinking about Michael Saylor. And he has this company obviously called Strategy now, but at the time it was MicroStrategy. And when in August of 2020, his company looked a lot like our company, its financial profile, kind of had this huge cash balance. We were making money, market was ignoring us, and we needed to do something to electrify, to light up our stock. And so I was listening to him talk about zombie companies. He was pounding the table hard on it. And shockingly, no one had really followed his footsteps at that point. This is just a year ago. There weren't any companies doing it. And I was obviously very aware of the value he created, the incredible stock performance he had. And so I reached out to him through a friend of mine, Tom Lee, and we connected. And Michael was incredibly excited for what we wanted to do, really helpful, gave me a lot of guidance, became a mentor, and showed me the ropes of how to do this. And so over a few weeks, I educated the board. Our board wasn't that up to speed on Bitcoin. I had to kind of help them get up to speed and understand it. And fortunately, they saw the merits of it pretty quickly. And because they were proactive, because we had a lot of skin in the game, we all decided that this was a great idea. And late May last year, we announced this Bitcoin Treasury strategy. But it was really just a process of kind of hitting a wall on other alternatives and hearing Michael Saylor in the background, making this clarion call to zombie companies like ours to adopt the Bitcoin Treasury standard. So we decided to answer that call, and we were the first to do that.
Bitcoin investor then.
Was I? Yes, I was. I wasn't like a Bitcoin maximalist at that point. I don't even think I had read the Bitcoin standard at that point, but I was very aware of it. I had followed it closely for many years. I had dabbled in it. I thought it made sense because I just tend to be a more outside the box thinker than most people in my industry. I tend to like things that other people don't like, or I tend to look for things that are less followed. And so it was a kind of a natural idea for me to kind of get more interested in. I wish I had been, more consistently invested in Bitcoin earlier on, but I was following it really closely. I have a lot of friends in venture capital who were big in it. And so I was very aware of it. But what really what embedded it for me, which I guess you could say orange pilled it for me, was the institutionalization and the success of MicroStrategy. So with the ETFs, with Larry Fink and BlackRock embracing Bitcoin, with Michael Saylor's incredible success, all of these things kind of came together for me and convinced me that Bitcoin was here to stay, that it actually had a uniqueness that could qualify it as a store of value. And that meant a lot to me because that allowed me to kind of compare it to the value of gold. And when I compared it to the value of gold and thought about kind of its characteristics and why it's as good or better than gold, that it should trade at gold's value or higher. That obviously is a huge gap, right? It's like gold's 10 times the value of Bitcoin right now. So that gave me kind of this investment thesis that made me really believe that Bitcoin has tremendous upside. And since then, I guess this has been over a year now, that just gets reinforced like every day.
So, right, I want to talk a bit about the challenges that you got when you were orange peeling the board, because that's kind of like very difficult. And most of these companies, especially zombie companies, are run by old-fashioned, established, sometimes old directors. They see Bitcoin mainly for the volatility and risks that come with that. And what were kind of like the main questions they were asking you that could have been challenging?
Yeah, I think very legitimately the volatility of Bitcoin is a concern. I think that there's it makes sense if you're a director and you're concerned about instability and your goal is to kind of maintain the status quo, that the volatility of Bitcoin is kind of scary for the typical director who's really just there to maintain the status quo. And so that kind of happened to us. I'll get into that, but we hit, as soon as we finished buying taking most of our cash and buying Bitcoin, it slid about 20 to 25% on some bad Mt. Gox news. And that was a gut punch and conviction test, but it was good that it happened because it enabled us to really think about our thesis and are we all in or not? And we ended up feeling like, wow, this is a great opportunity. We're going to buy more. But I think another factor, one of the factors that I think is difficult also to deal with is you have this shareholder base, right? And we have analysts who cover us, sell-side analysts, cover our stock, shareholders who own our stock for the healthcare story. they're not thinking Bitcoin. And these people are not, they haven't seen, they're probably not Bitcoin investors. They're probably not expecting us to buy Bitcoin with our cash. So that's a tricky thing for a board to kind of get comfortable with. How are we going to do this? If we do this, how are we going to deal with the shareholder kind of turnover or backlash? I think that's a big issue. That there's no right answer to that one. If you go tell people ahead of time, yeah, we're thinking about doing a Bitcoin Treasury strategy, they may run for the hills, and maybe you can't do it at that point. Like maybe there's such a negative reaction that you kind of have to. They put you in a position where it makes it difficult, but the way we did it was we decided that it was better to actually announce the strategy after, having purchased Bitcoin with our cash, and not kind of try to, give this kind of staged introduction to it. I just felt like it was better to be definitive and let people make that decision based on that. Fortunately, our stock really went up a lot on the news. Our shareholder base did really turn over. We now have, primarily Bitcoiners as our investors, and the company is 90% of our value is in Bitcoin. So it ended up working out, but there's some risk in that, in how to deal with shareholders who are not with you for the Bitcoin.
So tell me about this turnover of investors, because it's very interesting, and obviously, announcing a Bitcoin strategy allows a company that is virtually there, has got the price valuation, low stock performance, to kind of change its shareholder base, which can be good. Having, maybe more young, more energized shareholder, they actually become your ambassador, right? So they do free marketing for you.
And your critics.
Exactly, that's brilliant. That's all about. There is a downside, I guess, of having a shareholder base that is more hyped or more there for like high conviction, high energy, rather than kind of like, I buy the stock, I know that in 10 years it's going to be there because you have got a strategy, you have got a product. So tell me about this, which is something that not many maybe talk about, is how is having a Bitcoin-based shareholder, group.
It's exhilarating. It's invigorating. It's inspiring to have people constantly provide feedback on your company. Some of it is when your stock's not doing well. Some of it is negative, which is fine because, I think it's just valuable to hear. And part of the issue is, and we're getting most of this from X, right? And so a lot of it, you don't know whether people are actually shareholders or, or just talking something, or if they're real people sometimes. But in general, we have become familiar with a lot of our investors through X and through me, like going to conferences like Strategy World. And we get a lot of, inbound emails and stuff with people giving us advice. I think what's really cool about it is that people are so immersed and engaged with you in your company, which you really didn't have before. Like some people might like the distance they have from their shareholders and not want to be too close, but I find it really refreshing to be able to have people that are truly devoted to you, want to see you succeed, want to help you succeed, always have great input. The news flow, in a sense, even though we're not putting press releases out all the time, there's just this dynamic of kind of 24/7 activity on our stock. It just in terms of the banter and the chat, and there are people that just have X accounts that devoted to Semler, which is exciting and neat and helpful, and I welcome that. I think it's this whole thing. There's this electricity and this concept of volatility as vitality. That's a big piece of this.
Change from an institutional investor perspective.
What's interesting is there are institutions out there who believe in this strategy, and so we've managed to get some great institutional support. You can see, like, if you look at our shareholder base that's been reported, like Capital Research as investor, Morgan Stanley, Susquehanna, and we've had some really good long-term oriented institutional investors embrace it. They've had success with owning MicroStrategy or now Strategy, so they're looking for other opportunities to own public equities following the Bitcoin standard. There's this interesting kind of fact that a lot of institutional investors can't own Bitcoin outright. They're not allowed to, or they can't own the ETFs. So really their options are to own stocks that are proxies for Bitcoin. There's more and more of them now. It's been kind of accelerating, but that is something that we are benefiting from. That's something that kind of justifies why companies trade at a premium to their Bitcoin holdings, and there's kind of a scarcity value still to what we represent.
How much is Bitcoin and how much is healthcare?
For us, so it's really shifted. We own about $400 million of Bitcoin. We owned zero a year ago, and we had like roughly $60 million of cash, net cash. Now we have a cash balance for working capital that's relatively small compared to our Bitcoin holdings. And our healthcare business has declined as this has been happening. So the value of the healthcare business has really gone down because our revenues in that business have declined, and happy to talk about that. But so Bitcoin has kind of become the large majority of our value and our business. But we do have some promising new products and services that we are hoping will also drive value in the next year or two. These particular types of products have been huge growth drivers for our stock in previous periods. Between 2016 and 2021, that 5-year period, we were one of the best performing stocks in the world based on our QuantaFlo device for peripheral artery disease. Our stock went up 136-fold, and we had like a 13,000% return. So there are some options in the healthcare business kind of embedded in there that haven't really come to fruition that could create another kind of a value driver for us. So we could become a very interesting two-pronged narrative. It's not happening right now, and we're kind of suffering from a decline in our healthcare business, but we're hoping that will rebound in the next year or two.
Before we dive into today's interview, I'd like to introduce you to our partner, HIVE Digital Technologies, a publicly listed company building the next generation data center infrastructure with 100% renewable energy. HIVE was the first crypto miner to go public and the first one to have an AI strategy. With over 2,600 Bitcoin on their balance sheet and operations in Canada, Sweden, Iceland, and Paraguay, HIVE is fully committed to transforming communities, rebalancing the energy grid, and delivering value to shareholders with a low dilution and cash focus approach. If you don't know HIVE, check them out at hivedigitaltechnologies.com. It's very interesting because I'm kind of trying to box up this zombie company's profile depending on sector, right? What would be the best candidate for a Bitcoin treasury strategy? And I wonder, is the healthcare sector a place where perhaps there would be more candidates, or maybe not? Based on your experience, and you know the healthcare sector probably better than me, but I know that it takes some time to get approved, take years to each trial, and you could be working on something that is completely revolutionary, but it's never coming right. It's even worse than an oil drill. And I wonder, would be where maybe we could see more Bitcoin companies coming from.
I think they're everywhere. I do spend a lot of time, because I'm an investor, seeing companies from so many different areas that are great candidates because they generally have stable businesses generating cash flow they can use to buy Bitcoin. That's the best way to execute this strategy, is to use your operating cash flow to buy Bitcoin rather than issuing shares or doing things that are dilutive. They're accretive, but actually, increase your share count. It's better that you get the highest yield on your purchases when you use your operating cash flow, I believe. And so I think you want to be in those types of businesses, but they're in all sectors. Healthcare is just, the kind of healthcare business we're in is very dependent on the government, and, things move super slowly. So that's kind of the opposite end of the spectrum from Bitcoin, which moves so quickly. So, you do have that kind of sluggish pace, which is incredibly frustrating, especially for Bitcoin shareholders who are like, why is this taking so long? Why is this declining? I don't get it. And I sympathize with that because I was never really an investor in healthcare until recently. So I understand that. I think that I've always focused on media and technology. I think there are a lot of great media companies. I've pointed out a few on my X account, some zombies that are great candidates. A really good one that I've talked about a lot is Zoom Communications. This is a perfect candidate. Zoom is, we're not Zooming right now. We're on a competitor, or they think, but, there's a lot of competitors to Zoom and it's become kind of commoditized and they really don't have, a second act. It's really, being a video, video chat supporter or whatever, video meeting company. That is kind of a really slow growing story. This company has like $25 billion market cap, and a third of its market cap is in cash, and they're generating like $2 billion a year in cash. Very high margins, very little capex. Like that's a perfect example, but they're everywhere. That's probably the best kind of zombie in terms of size, other than Berkshire Hathaway, which will obviously never do this. Like that would be a great example. But they're in tech, they're in media, they're in businesses that have recurring revenues and recurring revenue models where, there's just this very predictable but maybe slow growth business that should continue to generate cash to enable really high yielding Bitcoin purchases.
So some companies obviously raise money through equities or use convertibles to buy Bitcoin. And you just said, it's better to actually use the cash that you have got to do it, which, obviously. So what are the drawbacks of using some of those instruments?
There are not really any major drawbacks. It's just there's this kind of hierarchy of where are you gonna get the best Bitcoin yield for buying Bitcoin with either your cash flow, which is incredibly accretive to your stock when you can do that, because basically you're using kind of cash that's not really earning anything, right? It's earning T-bill rates which is below your cost of capital. It's kind of like you're losing money sitting on cash. You can invest that in Bitcoin without issuing any shares, right? Like your share count doesn't change. You're just buying Bitcoin with it, and Bitcoin continues to rise if you believe strongly that Bitcoin will continue to grow, to this very impressive rate, then that's a no-brainer. Right? That's kind of your first stop. But if your cash flow is running thin and it's not moving the needle enough for you, you can't really buy as much Bitcoin as you want with the cash, then you have these other levers. You could use an ATM, which a lot of companies do who are in this movement to put Bitcoin on their balance sheet. They'll have an ATM where they'll issue shares accretively, because you only want to do that if you're trading at a premium to your Bitcoin holdings. That's this concept of MNAV. I'm happy to talk about that. The most accretive way to do it, though, within the capital markets is really through debt, where you don't dilute yourself with shares, and you use convertible bonds, which we have done. We're one of the few Bitcoin Treasury companies other than Strategy that has tapped into the convertible market. And so we're actually pretty levered relative to the others. We're about 25% of our market cap is in debt and convertible notes. So if Bitcoin continues to rise, we should outperform because we're a leveraged equity play on Bitcoin. But the real holy grail, and Michael Saylor and Strategy have cracked this market, is the preferred market. Those types of opportunities where you're raising money from preferred investors are very accretive, better than convertibles, and that's something we're hoping to get into.
Can you expand on that?
Yeah, sure. It's just the convertible market. If you do a convertible note, at some point, that matures, and equity. You may have to issue equity at a higher price than you're trading at. That's pretty good. But if you do a perpetual preferred stock offering, go to the preferred market and you raise capital there, it could be perpetual. You may never have to, convert the bonds into equity. You may never have to kind of have this redemption process. So it's kind of forever money, which is nice. And also it's less dilutive, and it allows you to kind of perpetually raise capital without diluting your common stock. And that's just an amazing opportunity, slightly better than doing it in the convertible market if you're trying to minimize dilution of your common stock.
Very interesting because you can do that in the US.
Oh,
I
yeah.
know that in Japan, MetaPlanet has to find
Yeah.
another solution, and the
Yeah.
UK
Yeah.
as well. We don't have that kind of solution. But you mentioned about trading at a premium to be kind of like very important in order to be able to use those instruments. Can you
Mhm.
also expand on that? Why you need to be trading at a premium?
Well, you need to trade at a premium because the idea is there's this arbitrage that Michael Saylor talks about. Whereas when your stock is trading at a premium to your Bitcoin holdings, it allows you to sell your stock, at kind of this gain essentially versus Bitcoin is it has by selling your stock at a premium, you kind of capture this gain, you use that gain to buy Bitcoin, and then Bitcoin goes up further, your stock continues to trade at premium, and you just kind of continuously take advantage of this arbitrage between the value of Bitcoin and the value of your stock, and hopefully your stock can trade at a healthy premium to your Bitcoin holdings, and it enables you to very accretively buy Bitcoin and create value. And that's the magic of what Michael Saylor invented and has executed on. And that's why, he deserves this premium, but he's also deserves this premium because he is, he's opening up Bitcoin to so many new capital markets. Again, he's a unique asset for institutions who can't invest in Bitcoin directly. He's one of obviously the largest market caps. So it allows really big institutions to own Bitcoin through strategy. He's created kind of this scarcity value as a public equity that kind of stands alone among Bitcoin proxies.
So what is the role of Bitcoin in capital markets? Is it like store of value, treasury assets, or there is more?
It's a great question. I think it's more. I don't think we really know exactly how that plays out. I think it's pretty long term. I think the goal right now for us and other Bitcoin treasuries is to accumulate Bitcoin and as digital real estate to kind of, it's like the gold rush, and you want to own, like Michael says, the major buildings of Manhattan. You want to own Bitcoin because it has this optionality. It's going to be incredibly valuable, much more valuable over time. And after you're kind of past that accumulation stage, you can consider options for becoming a bank or whatever it is to leverage your Bitcoin holdings. But they're going to become kind of this very valuable real estate in the digital world. I think that Bitcoin's role for me is really more as a store of value. I think of it as a great investment at these levels relative to gold. And I think of it as versus gold because I do think of it as a safe haven and store of value. I think that that's gaining traction too, because as more institutions buy Bitcoin, really they're buying it for that, I think, that goal. And you're seeing that just accelerate. And I think that the store of value thesis is starting to really prove itself out. It recently, with the whole tariff tantrum that we've had the last few months, it's really interesting to see how well Bitcoin has performed. And gold has performed really well, obviously, when there's maximum fear. But Bitcoin is catching up to that. That's been really impressive. I hope that isn't just a one-time thing. I'd love to see people turn to Bitcoin in times of uncertainty.
Looking forward to see what's happened next after this Bitcoin treasury company trend, right? Because we are in the middle of it, right?
Yeah.
It's going to be all this year is about that. It's kind of like, do you remember when there was the metaverse a couple of years ago or 3 years ago? And it was like every single day was like, headline, metaverse, Nike, blah, blah. It was like bombarding you with that kind of like buzzword. It became a buzzword. And now it's all about that, about Bitcoin treasury companies. But I would like to see past that and looking forward when things settles and it's not news anymore. What's going to happen next?
Well, there's two really interesting things that I'm looking forward to. One is when you start to see like really large, well-capitalized, healthy businesses buying Bitcoin. And, a Meta, for example, or a Google, like what Tesla did years before, like that's going to be a major, like inflection point, right? And we haven't seen that yet. We really haven't seen companies that are, growing double digits, generating a lot of cash, kind of dominant players, turn to Bitcoin. We just haven't seen it. We've seen it a little bit, but we need to see that. I think it's going to happen sooner rather than later. I think that there's enough forward-thinking leaders of these types of companies that, will turn to Bitcoin because they're going to be convinced that the institutionalization is here to stay. I also think you're going to see consolidation among Bitcoin treasury companies. So you're going to see kind of, perhaps you have a healthcare consolidation play, right? Where like Bitcoin treasury companies in the healthcare space kind of get together because they want to get more scale in Bitcoin and they see synergies in their healthcare businesses. You could see that in other areas. So there's kind of this, there's this race to own a lot of Bitcoin, and maybe you can do it in a creative way through acquiring other Bitcoin treasury companies. And you'll have, whenever you have like, this fragmentation and a lot of companies and the things settle down, like you said, there tends to be kind of a consolidation phase.
Very interesting. I think you're right. That's kind of a way that we can revitalize capital markets. And then there will be, a race of merger and acquisition. Listen, Eric, it was great to have you on the show. Thank you so much.
Great to be here. Great questions.